In this video, we will tell you the 12 rules of money that you must follow to get rich very quickly. We were searching for these for around 6 months, and then we found them. With proper rules of money, you could accumulate wealth without any effort. Watch this video till the end, or you may miss some most crucial rules. Now let's start. 1. Diversify your investments. Putting all your money into a single stock or any other asset may be risky. If that investment falls in value, you will see your money drop. You must use the different investment vehicles to utilize your capital and to grow it. Keep in mind that you should invest a maximum of 30% of your total capital, and with that 30%, you should buy different assets like stocks, gold, cryptocurrencies, silver, real estate, and many others. With this strategy, you will be able to lower your risk and increase your money and get rich easily. 2. Search for more income streams. Only a single job is not enough. You will have to look for side gigs and passive income streams to get rich quickly. You may work as a freelancer by posting your skills on websites like Upwork or Fiverr. You may rent your house or apartment to get rental income. For this, you may use the app Airbnb. Setting up a vending machine is also a lucrative business if you put in some effort at the beginning. Press the like button and also the subscribe button if you want to know more amazing financial tips and tricks to get rich quickly. 3. Invest in a pre-owned vehicle and put 10 years of driving under its skin. Though beautiful, brand new automobiles are prohibitively costly and see a staggering amount of depreciation in the first 2 years after purchase. Leave the depreciation to someone else and enjoy the benefits of modern, well-built automobiles that, with regular maintenance, may last for 10 years or more. In the long run, you can save a ton of money by driving this way. 4. Use the 20-4-10 rule if you want to borrow money. Taking out a loan to purchase an item with a declining value is never a good idea, but sometimes you just don't have the cash on hand. If that isn't possible, try your best to avoid going into debt by setting spending limits such as a 20% down payment, a 4-year loan term, and a maximum monthly payment of 10% of your gross income. Paying a large sum down ensures that you won't be underwater or paying more on the purchase than its value the moment you take it out of the dealership. You may expedite the process of building equity and lower your total interest paid by reducing the duration of the loan. In the end, you can keep your product from draining your finances by limiting the amount of the payments. 5. Put money aside for further education. Prioritize retirement savings, but as soon as your kid is born, establish a routine of setting down at least $25 each month for college. Loans for college are easy to acquire for your children, but nobody will give you money for retirement, as you may have heard. As a 70-year-old single parent, your children will not be grateful if you have to move in with them so they can afford college. A 529 plan may grow even a little amount over time, so even a little bit helps. As a parent, getting a head start may make all the difference when deciding which institution is ideal for your kid, rather than only looking at financial assistance packages. 6. Use credit cards responsibly. Finding a low-interest card might be a lifesaver when you're carrying a balance. Finding a rewards card that returns at least 1.5% of your spending is a good idea if you pay in whole every month. Stay away from rewards cards if you're carrying a balance from a previous credit card. Make quick payments with a low-interest credit card. Be sure you're receiving enough out of your rewards programs by reviewing them often, even if you pay in full. Your spending and the use of incentives are subject to change, as are the programs themselves. Not wanting to play the game or deal with a sophisticated wallet is no reason to earn less than 1.5% back on anything you buy. 7. Put money aside in case of rainy days. 3 months' worth of living expenditures must be readily available in the form of cash or credit. While it's excellent to have 3 to 6 months' worth of costs set up in an emergency fund, you may have other, more pressing needs, and it may take you a long time to build up that amount. Plan B is something you should have in place while you are saving money. Such assets may include funds in a Roth IRA, from which contributions are free from taxes and penalties, available credit, or an underutilized home equity line of credit. 8. Obtain insurance. Invest in catastrophic expenditure coverage rather than spending money you can easily afford. Your house burning down or a vehicle accident resulting in a lawsuit are examples of large things that may financially ruin you, and insurance should shield you from these unforeseen charges. Insurance coverage with large limits and deductibles are what you want. Filing a string of little claims will never amount to anything financially. The potential benefit of lower insurance premiums could be more than offset by the possibility of a rate hike. 9. Amount owed on the mortgage. For a 30-year fixed-rate mortgage, the monthly payment must be manageable. Else, the property would be out of reach. If you shop around, you can find a hybrid loan with a cheaper interest rate that might end up saving you money. Aiming too high, nevertheless, if an alternative loan is your only option for purchasing the house of your dreams, is a red flag. There are a lot of additional expenses associated with housing, and a mortgage that is too expensive may lead to a downward cycle of debt. 10. Rate of mortgage. At the very least, lock in the rate for the duration of your intended stay. We understand that plans sometimes change, but we want to make sure that a large payment increase doesn't push you out of a house you've been hoping to live in for a long time. For those who are certain that they will be relocating within the next 5 years, a 5-year hybrid may be the best choice. The stability of a 30-year fixed rate is worth considering if you anticipate staying for 10 years or longer. 11. Prepayments for mortgages. Instead of prepaying a low-rate mortgage that might be tax-deductible, you should do something better with your money. A mortgage that is paid off in a shorter amount of time and with less interest sounds fantastic. Make sure all of your other vital bills are paid before thinking about making additional payments to lower your mortgage balance. First and foremost, you need to have a sufficient retirement fund and eliminate any other debt. This is because the interest on most other loans is not deductible and the rates are often higher. It is prudent to have sufficient insurance and that rainy day cash saved up. Go ahead and pay down your mortgage if you've already done that. 12. Put 15% away for old age. An early retirement or a late start would need a larger savings cushion. Do the math on your retirement savings strategy. The average person would be well served by starting with 15%, which includes any corporate match. Get a routine where you save more money every month, even if it's not enough. Also, you should prioritize saving for retirement above everything else. The years when your funds weren't generating tax-deferred returns, missed tax benefits, and business matching are irretrievable. That's all for today. Now you know all the rules of money. Sir Warren Buffett has also said these rules, but nobody follows them. If you could follow these for at least 1 year, you will become rich, for sure. If you want to know more amazing tricks to get rich in a very short time, then do press the subscribe button. If you loved watching this video and learned something new, then press the like button below. Feel free to comment below if you are left with any queries or suggestions. Actually, these rules are told by all the millionaires, like Sir Robert Kiyosaki, Elon Musk, Charlie Munger, Jeff Bezos, and all others, but these are not promoted in the proper way. It's my request, please share this video with all of your friends, relatives, cousins, colleagues, and family members for them to learn. Money is truly like a game, and if you could play this game with proper rules, you will win it. Many of my friends have used these, and they got rich already. Now, for getting rich, you must do one more thing, that is sacrifice bad things for betterment. Yes, you will have to sacrifice many things if you want to be rich. These rules will work well if you could sacrifice the proper things. We have made a specific video on the sacrifices you need to make to get rich. Click on the video appearing on the left side to watch it. Thank you.